Tesla smashed deliveries today, and you can see that big money was right. They were accumulating hundreds of millions of dollars worth of call options for Tesla. And in the past couple of weeks that we've been following them, stock is up now almost 16% this week alone, and this month over 25%. And now that that $200 level has been taken out, I have two major profit targets for Tesla over the next 1 year and over the next 2 years. And I want to share with you guys my master plan. I want to go over the exact position that I'm currently holding because I did close out of my September calls today. I took my $48,000 profit while I had it. And instead, what I did was I opened up a position for December. This is only half of the position that I want, but I want to explain what my plan is going to be over the next 12 to 24 months. Now, I'm going to skip the actual delivery numbers because there's so many better people out there who do that. Farzad already made a great video going over the delivery numbers as well as the energy deployment and how much that has grown year over year. What I'm focused on is this massive monthly time frame. Now, I want to say that obviously long term, I am invested in Tesla because fundamentally I believe in the company, I believe in the CEO and the executive team, and I believe that is the number one undervalued AI play of a lifetime. The main reason that I'm so bullish on this as well is that technically, from a macro technical analysis standpoint, this is a perfect play. Now, for those of you who are in my private trading academy and you trade with me every day, you know that there are other things that I trade all the time. Like Tesla is not the only positions that I'm taking each and every single day. There are plenty of other stocks that we're focusing on and trading on a daily basis. And I had somebody ask today on X if I take into account fundamentals when I'm trading or if I'm only focusing on technicals. And as crazy as this might sound, most of the time I'm focusing only on technicals because if I get too invested in the company, then I will emotionally not be able to cut a position when things are technically looking terrible. A great example of this was me starting my long-term position on Tesla back around 320, 280, and then averaging down around $200. Nothing from a technical standpoint back here was telling me that this was a buy. The first time that we got a buy signal was down here in January of 2023 that was followed by a rejection later on. So when there's a unicorn setup like this, which I'm not going to say is once in a lifetime, but we have a massive monthly setup that is looking to blow the top off of this. We have short sellers who have been slamming the stock down for a very long time who are probably going to get crushed. We have big money buying hundreds of millions of dollars worth of calls for this stock, and the public for the past year has been doing absolutely nothing but beating it down. When you combat that with a technical setup like this, it is a very, very good sign that we're going to see a massive breakout. And all that coupled by the fact that Tesla has basically been setting this massive 10-year plan up for a very, very long time, and robotaxi was a massive portion of this company as well as AI and robotics, at least for the past decade. And that's why I'm so bullish right now. Now, as far as our price targets, right? We have this resistance level that we've been rejecting on multiple times for the past couple of years. At this point, we are currently pressed up against it. Now, in the short term, if we just take a Fibonacci retracement from that most recent swing high down to most recent swing low, you're going to see that there is a chance that short term Tesla does continue to push to 240, maybe 260, and potentially rejects. And before we go any further, I need you to understand the severity of these candles. These candles close and open every single month. So one of these candles represents an entire month of trading, meaning that we only get 12 of these candles in a year. So a lot can happen in between the candles. It's very hard a lot of the times when people say like, well, how do you think deliveries are going to go? Or how's, earnings going to go? I have no idea. Like this technical setup is showing us that we have strength into the next month. But within that month, Tesla could go all the way up to 280, pull back down to 240, and then close at 260. What I'm more so focused on is knowing that I'm always trading and investing in the trend of the macro direction. So I do think that short term, we could see Tesla reject around 240 and pull its way back down to lows of $200. And that's why on the current position that I have on Tesla, the December 20th $225 calls, I only bought with 20 of these, which is still a big position size of $74,000. But in total, I would want about $150,000 to $200,000 worth of Tesla calls there. And I plan to do that if we pull back in that range. Now, for anybody who thinks that that's not good risk management. Those are big numbers, but you have to understand that our position size would be $150,000, but we're up $461,000 in confirmed profits on Tesla alone just this year. So while it is a big trade, it is not that big relative to our capital, let alone to just the profits that we've already locked in. So understand that if you're setting up a position like this within your fund or your portfolio, that you're going to have to mess with those percentages to fit your own risk management. Now let's talk about the actual target zones and why I think we'll hit these levels within that time period. So in order for this continuation pattern to really break, we have to have what's called a change of character. So you can see that every single time that price has sold off, we have basically recovered back up into our golden zone and then continued to sell off. You can see that if we go from swing high to swing low, we came up into the golden zone, sold off. You can see that if we go to this most recent swing high here to this most recent swing low, we pushed back up and sold off. Now, for those of you who do not understand technical analysis like this, we teach all of this in our course completely for free. Links can be in the description. But the most important thing to understand is that we are still in a downtrend, and we are going to be in a downtrend or a downward structure basically until $280 is broken. Once $280, and I should say if $280 is broken, then we will have a complete change of character. And this means that the structure of the market will begin to be bullish again. And if we push through 280, there is nothing at all stopping this from moving its way back up to $360 or $380. Now, this horizontal gray bar that I just turned on here is called the volume profile. And what this does is instead of showing you how many shares were traded within a specific day, it is showing you where money is coming in at. So at these specific price levels, and where you see the wider parts of these price levels, this is where all of the volume and all of the action is. And so when price is trading within these thick levels, it is very easy to get stuck within a consolidation phase, which is why we've been rejecting around 280 and bouncing around these 170 and 150 levels. But once price is able to break above these volume profile levels, or even below this volume profile level, like we saw back here, it is very easy for price to quickly drop and then get bought right back up because there's not a lot of volume within those levels. This is why if you've been a longtime viewer of the channel, I was expecting Tesla to actually drop to lows of $75 all the way back in 2023 in January, because that's where the gap fill would have been. But instead, it got bought up very quickly, and we've been consolidating within these ranges ever since. Now that deliveries were strong, and if earnings comes in very strong with great optimism from Elon and great outlook, I think that we could easily see price push up to $280 by the end of July. If we're able to hold over that level, I think that we could actually see Tesla go from 280 up to 420 within half of a year, maybe 180 to 200 days. I think from that point, we'd move up into all-time highs, potentially, and that is why I went in with my position today with half the amount that I wanted, because if this never recovers, I don't want to sit here for the next 12 to 18 months kicking myself about how I was right and then being upset that I missed out. So now that we talked about all the upside, what is the downside and what am I going to be looking for when it comes to potential rejections? Well, the first thing is that a pullback to $200 is not out of the question. You can see that we are still kind of stuck within this range, and we could continue to be range bound, maybe even, out till the end of the year. I doubt that that would happen because of how fundamentals are playing out, but that could still happen. That's why I went for December. But what we need first is the break through that 240 level that will therefore bring us back up to 280 and 300. And I also want to note here that the BX trender, which is showing us the amount of buying and selling and pressure that's coming into the market, the BX trender started by making higher lows, which is the sign of a bottom, and now we've carried through into higher highs. So if we see more and more pressure continue to come in, there's no reason why we couldn't see this thing hit 280 by end of July. I hope that this video helps, guys. If you want to get access to all of our courses completely free, the link is going to be in the description. And if you guys want to live stream with me every single week, get access to all my real-time trade alerts that you guys see here, as well as learn our two-step trading system. The link to our private academy will be in the description. As always, guys, thank you for all of your support, and I'll see you next time.